Hey everyone, welcome to August 22nd coaching call. We had some Bitcoin, Ethereum, and ES trades, and we're just going to start off by just going over them today. Okay, so what you guys can see is the S&P 500 chart here on price, and then below we have the advanced decline line, and then below that we have the NYC tick. So what's awesome about this is that this is 500 stocks where they average it out based on each one's market cap. It's a cap weighted average, so it gives an aggregate of price, but sometimes the price and how many stocks, this is a quantitative measure. This shows how many stocks are above and below yesterday's close. So you might say, well, Matt, if you're trading the S&P 500, why aren't you using the S&P 500 advanced decline line? Well, you can if you want. It would go to 500 negative and minus, 500 positive, minus 500 negative, but I like using the NYC, which is the New York Stock Exchange, because it's way larger. It's more broad. And I want a broad spectrum read of the entire breadth of the market. This is called breadth analysis. And then underneath this is the tick. This is a moment-to-moment buying and selling pressure like a heartbeat. So as it opened, I think because I was either prepping Ethereum or Bitcoin, I wasn't really super prepped to do this one as well. This might have, I can't remember if this was around the time I was focusing on Bitcoin or not, but it popped up and I remember thinking, well, this is definitely not an open drive here. I mean, even though at the time it opened, right, it was 575. I mean, these aren't extremes. This is not plus 1,000. This isn't over 2,000. And the pre-market context wasn't really calling for a breakout trend day at all. We were super overextended. In fact, if you go on my 60-minute chart, there was a major zone there. So let's just go to that real quick. That was the major zone. So as this was failing, you actually could have been prepared to short this. Let's just zoom out and see what this zone was. This zone really was just, and I probably could have drawn it a little bit higher up here. It's just this key swing here. This last swing high before we hit a huge drop down, right? So it's a trend, it's a start of a trend swing high launching point. So whatever, let's just say you didn't get that one, which is fine. I didn't short it either. Okay. So there was a lot of conviction, basically, that when this open drive failed, we had an open drive down, and this basically took out all this data. This confirmed it. We had a huge reversal in the tick, so it was likely this was going to be a trend down day, at least this part of the day. Now that doesn't mean that you can start shorting this because we were really at the lows and it wasn't breaking structure. But so where was a lower risk, a second class entry here? At this point in time, right? This is at noon, so there's the afternoon session left, right? Okay, this is the high of the day, and that's the low of the day, and this is at noon. Now, we know that there's a stat that says that 70% of the time, the higher the low in the ES happens in the first hour of the day. So I'm thinking, is this going to be the low of the day, or is this going to be the low of the day? As as I was pulling back up in here, right? What was going on? Right, let's go to noon. Okay. Now we need to go to 12:30. I bet. Okay. So at this moment in time, at this point in time, right, the bias on the day is clearly down, right? The bias is down. This isn't a sideways day. We broke the low of the day. In fact, we broke this low and we broke that low, right? And we did so on strong, sustained momentum, right? This is, if we look at the vertical volume on the 60-minute, this is heavy. You can just see it in the pace and character of price. Okay, so as this is coming up, I'm thinking, is this going to be a V reversal when there's 186 stocks are down on the day? And I had this in the wrong spot. That makes sense. Okay, good. Um, there's 186 stocks down on the day, this moment in time, right? And we've been below zero, approaching minus 749, confirming this price action. As this pops up into the zero line, right? What's the tick doing? Well, if we just look, this is the start of the day at 9:30. We can just see this is the zero line. The general skew is below zero. We can see the extremes are around minus 610 with an absolute to minus 917 stocks down on the day. And this is only 367 representing a buying pressure, right? Moment to moment. So the skew has been down. So as we're popping up here with the sustained momentum, the intraday bias down, the other markets down, a very weak AD line, this, which was skewed, just made a positive extreme, okay? That's a volatility exhaustion. That's a sell signal in this context because it's the sustained momentum's down. I'm thinking this is going to be a pullback for another leg down. The high of the day is already in because I told you about that stat and so on and so forth. This is a very weak tick. Also on the daily, we were really due for a steeper pullback because we know that markets, even in larger time frame bullish bias, are prone to pullbacks when this V is completed. I just switched to the daily. Can you guys see that I switched to the daily or no?
Yes.
Oh, good. Okay. So this was really overextended anyway, right? So all that, right, being said, right, that's how you would get another, and then the AD line confirming that, and we've had a bearish tick skew the whole day, right? So, you know, if you didn't short this failed breakout, which was a nice zone fade, then you would take this pullback continuation because this is a trend down, at least from the RTH, this is a trend down day. So that's the ES context for today. Let's go to Ethereum, Bitcoin. As I'm going to that, if anybody has any questions on that, you can ask that now. You can see after this failed breakout rather, when we had the down, you can see the increase in the vertical volume, especially on the open. Right. Yesterday's Ethereum runner is still in, right? If you have good trade location, it's really nice to just be holding these in. And then the plan is that, you know, we were gonna have sort of a choppy sideways day, although I wasn't really excited about it. That this could be the first acceptable reload add-on if you were going for a thesis that this is going to go higher and at least test up here. And it did hold, so that one's still live for this add-on, right? This is just an intraday double bottom. When I said it was not low risk, it's because, yes, this has good trade location because it's an intraday double bottom. But if we just zoom out a little bit here, right? We are in this basically sideways range that's contracting now. So there's some volatility contraction. And this double bottom, while it is correct process because it is the low of the day, it's the weakest key reference area in the day. We did top here and then try to make it and top again. Look what happened every time we got to the zone. There was a strong move down, strong move down, strong move down, strong move down, and then another. So granted, let's see, the relative volume wasn't super high today, 71%. Wrong chart. Let's see, 58%, right? Choppy. It wasn't really, it was actually below average volume. So that's what I was also thinking. This is just condensing below average volume. That's on its side. The trade location is okay, but this zone that it's coming from is stronger. See, this zone just went up here. This little zone just launched us here, but these zones had bigger moves down. Now, it's not as big as this one or this giant one, right? But that's the idea of how I'm basically saying, okay, how strong is this zone? What's the move that launched from it? Is it coming into a zone that's going to change my bias? Clearly, I'm not. My short term is completely neutral. Every single type of launching point that seems sustained gets eventually reversed right now until we break out of this with conviction. Okay, so that's Ethereum. I'm also trading Bitcoin at the same time because they kind of do the same thing and they can kind of tell each other. Um, yeah, there was a Bitcoin. Let's see, yeah, Bitcoin made a nice double bottom too at the same time here. And right, and then I had a zone below it, which was just yesterday's low. And this is actually a high volume node of this whole thing too. So this was a pretty good trade once Ethereum also was hitting that. See, Ethereum had a nice if we look at Ethereum, Ethereum was like testing its range lows down here, which in my opinion was better trade location than what Bitcoin was doing. Bitcoin was kind of retesting this high volume node. So I got in on Bitcoin by using by going long on Ethereum and using a zone lead. So okay, well I can go Bitcoin's okay too because Ethereum is a good trade location. And if let's say you're wondering if whether you should get out of a Bitcoin target, but Ethereum hit a really good zone, but Bitcoin didn't, you can use that as an earlier exit as well. So let's see here. So this trade basically, there was the reload with Ethereum. See, I also used a zone lean to get on Bitcoin. You see how Ethereum hit its zone, its low today because it was a better trade location. Bitcoin really was ahead of its zone, but you could kind of draw it up here. But this was kind of wide for Bitcoin. But you could see, this was stopped out of break even, but still it got us a little something. You know, I wasn't super. I'm okay with the runners from yesterday rather than trying to get really aggressive on a reload today. But the Ethereum one's still good. So this is how basically I'm approaching it. Very low risk. If we go out to the daily, we're still in this. Now this is just an intermediate time frame trading range. Like this yellow box represents the resistance of it, but really we're just going back and forth in this box. Until we break this box, you should be kind of neutral in your bias on a day-to-day basis. Because Bitcoin has been short-term, you know, neutral and also intermediate term kind of neutral, but we did eventually launch from here. And every time we have launched from here, we have retested this orange zone. So that is something to keep in mind that if we do break this with conviction, which I would, I'm guessing based on the fact that we launched here, that this would be higher odds that we would go up here, which it's 100% range of this box. And then this would be a really good place to take profits again. And, depending on how it behaves up here, you could also potentially initiate a short. Now, I drew this because it touched here and then it had it move here and then up and then hit here. But really, you know, that's another spot we're looking for. But what is interesting about this box is that you can see here we have a very large high volume node that Bitcoin and Ethereum are both around. And it has acted before as support. It's also broken, but also look, trend out of it, trend out of it. It's if it doesn't hold, it starts a trend. And this is kind of like forming a box anyway that we can trend out of. And if it launches from this VPOC, that can get pretty strong conviction. But this is no slouch. I mean, we have all these crosses and moving averages up here. We had, like I said, this is from, you know, pretty much since August 8th. So we're talking, this is an intermediate time frame because it's a couple weeks. That's something that's blocking us now. But the fact is we had this Dragonfly Dojo and we brought it right back up. That shows that there is conviction. And the intraday allowed us to get in, not on anything great here, but something intraday. Like I said yesterday, I thought Ethereum was easier to get in on because it was at these lows and there's confluence here because there's lots of touch points, whereas Bitcoin didn't. But you can use a zone lean if you want to trade Bitcoin only or trade them both. And same kind of context, we are still oscillating around a high volume node here. That's where trends start from. They start from high volume nodes. That's a high volume node. You can also draw a high volume node like this, just over that data, and it should match up right with this one. You can see it does. And the odds are, I'm saying, because this is a mature balance, because there's volatility contraction, the market moving news, I guess, wasn't as big as I thought because it was the minutes instead of the meeting or whatever they do. But this should start a trend up. I mean, direction, good odds for direction, and also because we're in this giant lower quadrant, the odds are that we're going to go up. Yeah, I mean, Not a lot of super crazy action, but just low risk trades all week. I could go through some of them, but you could see how this held in the overnight. This was at 11 o'clock, right? If you draw in your zones well, you really don't even have to readjust them the next day because they flip rolls. So this was the high of the day, high of the day. Also, this is a high volume node. And then we were kind of just oscillating around it. So it wasn't really providing much information. But once you break something and then come back down, it can act as support again, and indeed it did. But really, if you were really prepped and you had this marked as a major zone, you should have been getting ready to fade this because this was pretty extended. We're talking a move from 5,632 up to 5,665. So I mean, not super overextended. Let's see what the ATR is. It's around, yeah, I mean, so it's not like we maxed it out, but just the way that we got there and how overextended it was in leg count on the daily really was preparing us for this scenario. It took a couple of days, but that's kind of why, so now the short term, right? You should be thinking, oh wow, we have a balanced breakdown pattern. This is now I'm potentially now going to shift my larger time frame bias. It should definitely be neutral now, but you should also be possibly thinking, hey man, depending on how much this dips, this could be bearish for a while. But remember, anytime it dips back into major time frame support, like if this thing broke down and then we started a little short-term downtrend into this, then the larger time frame, bigger picture patterns can kick in, and then we can have a really nice low risk long entry. What happens is that traders see this trend. They're like, how the heck did I not catch all this the whole way up? So now they just think every time it breaks out, it's got to be still bullish, and they just keep getting destroyed. Or, they get too aggressive, even if they're smart enough to just fade support and not trade a breakout. Because, I'm keeping in mind, hey, markets are prone to overextension even when they're bullish because it's overextended, right? And this is what we got. So yeah, breaking 2 days of data, right? This is the last straw for the short-term bias. If we can hold here, maybe this can form a balance and the short-term can have another leg up. But if this breaks, this could start a deeper intermediate term downtrend. We'll have to see how the day closes. But certainly, you didn't want to step in front of this, right? If we, so, and then, not trading is also trading. That's also a signal not to trade. And keeping the powder dry for just a better low risk entry. So now that I went over that, some shorter term income producing trades, we take a look. Bitcoin down here. Oops. I don't know how true this thesis is, but there's, if the dominance can get to such a huge amount where it's like over, a fib ratio, it can actually contract, and then we can have a minor or initiation of the start of an alt season. But we got a ways to go. So I'm just going to do a broad market overview now. I'm going to just look at a bunch of coins here. This went to $28 last bull run. It's at 51 cents. Yeah, I mean it's crazy. A lot of these, we're just at, just this year at, not, you don't even have to have the all-time high for these targets if you're an investor. I mean, just look at what some of these targets were for this year. Wow, right? This is why we take profits. I mean, very volatile. Okay, people are nibbling now. This has gotten so much pain now. They're like, okay, these are great value buys. I mean, this was around the same price that I bought in December and wrote it to $4. So everything's kind of went back to December's prices or even lower. Yeah. a strong move that broke above this trading range, inside this trading range. So we can hold above this zone here. That would create structure and keep this launching point candle intact. You could just see this even in a, this is at $142. So quite a run. Um, quite a run. This is a micro that was just listed on an ETF fund. Not a huge percent, but the fact that it is pretty awesome. It's an AI play. Some of these have obviously held up way better than others. Like this V pattern and ton is really bullish. That was at $56. So, DCA guys are happy if they start accumulating again here because this is when there's blood in the streets, there's opportunity. Not too off. Yeah, hit that October low and then it went, let's see, recent highs. Not bad. Even if you don't have to have even 56 all-time high target, this is obviously a target, right? That's still 3x, close to it. One coin is held up almost suspiciously well. Let's go to it. Notice this one is held up suspiciously well compared to the other ones. It's let's go. It's not. Let's go to December, and you see how this one's held up very well. Pretty crazy, right? It's a cabal coin, is what I was getting at. If you want to know the truth, I'm ashamed to say that I've invested in it. I didn't really know at the time, but they really do hold up well because they just have endless money to prop it up. So, well, that's kind of my market overview and trades. If Kobe, you got any commentary, or if anyone's got any questions as well, this is the time.
Well, this was super comprehensive. Thank you so much for taking the time. I I enjoyed it.
Thank you. Oh, you see how I marked this day out on Wednesday, July 31st? My brother's a big believer in this coin, so he sent me this really excited. Cass is looking strong. So I sent this educational post to him in private. Um, that's where he thought it looked strong, right? So let's just learn from this, right? Right. Anytime something looks strong, you should be thinking, right? Especially, yeah, okay, this is a bounce breakout, but keep in mind here, right? Until it breaks this directional conviction, this could also be a false breakout. And let's not kid ourselves. Things really don't start to go well until Bitcoin starts going well. So we can look at the date here and go back and look at what Bitcoin was doing. It probably wasn't doing well, wasn't near its ultimate. You'd have to go back and look. But right, that was right when he thought it was looking strong. And I, I don't know. I mean, this is a huge amount of money, right, that you lose when you don't take profits. So it is what it is. Um, Now, how we got there was more bullish this time than going straight line up, which is why it had good odds to get to this trend line resistance. And you wouldn't be like shorting this on a level because of watching how price got here. I'm not going to short this again, but I wouldn't be buying up here now, right? And, you know, I don't have more data than that. It's relatively new as well. Does anybody have any trades they want to talk about? I'm not. If you guys are good with this, we'll just wrap it up short. But if you guys got any questions, any trades you took? One thought is that if you are going to trade intraday, make sure that you at least got the low extreme of the day or the high extreme. If you're trading on the intraday context, you really have to understand that the larger time frame bias is probably not going to be, for you or against you. So that if the larger time frame bias is more neutral, like it was in ES today, I'm sorry, let's go to Bitcoin. Like it was for Bitcoin today, the larger time frame bias up here, you should be saying, okay, it's got potential to go up here, but now everything's in balance. So I'm not giving it one way or the other, especially when it's up here. That's where that intraday context comes more into place. That's the same for the ES. I mean, the larger time frame bias has clearly been bullish with this V pattern, and now that it's completed this V, you're thinking, okay, now it's going to be prone to a pullback. That's just kind of how you think. When it was down here, right, and you had multiple leg counts down into that, right? The larger time frame bias, because the short term and the magnitude of the move was bearish, right? So you had at this time frame, this intermediate time frame here, and then this short term time frame here were all bearish. But the big picture, which if you zoom out, which was here, this giant trend, right? Pullback launch, that was bullish. So you're thinking, okay, what's stronger? This leg count down or the strength of this entire trend, or this could be now short-term exhausted. I'm at the very least going to be neutral now instead of bearish, or I'm open to going along with the idea that it can turn around and get very bullish. Now, once you saw this tail, that was giving you another hint. And then the confirmation of it, obviously, you had a launching point in direction of conviction candle, a little balance is a nice confirmation. So a pause day was good to get in on, So once it breaks, now you have time frame alignment. The short term now is up. You have a balanced breakout. Right? Because it came off the zone, the big picture's up, the short term's up. You have time frame alignment now. To the upside, larger time frame now is going to be bullish. I'm going with this V pattern as well because the bigger picture pattern now. I'm also thinking, oh, V pattern too. Okay, multiple time frames are up. The intermediate term time frame trend now will only come into place because now the bigger picture is aligned up, overpowering it. This is bigger than that. Once this becomes exhausted again in leg count and this pattern becomes this V sideways completion thing, right? I'm not saying this thing can't go here and maybe go higher. I don't know, but this, at the very least, you're not getting aggressive buying at the top of a V, and we could be prone to a steeper pullback because it's so overextended. But that doesn't invalidate that when we get to a bullish larger time frame pattern or support zone again, that this V pattern, bullish larger time frame bias can kick in again, even though right now you should be kind of like, okay, it's neutral. That's why the short term was really important today for the ES. And you could see, you could let the market tip its hand by the fact that this opened up very mediocre. Like it did not open up on anything extreme. So this was like, okay, reversal signal if you really were prepped to take it. Then the second entry here was a pullback continuation because it was confirming the whole day that the intraday bias, the sustained momentum was down, and now the high of the day, 70% of the time, no chance to go down. So I just kind of went over that again for some folks that just showed up, but that's it for the day, folks. So last call for alcohol, and if you
Thank
don't
you so
drink,
much. It was really awesome.
yeah, we do club sodas as well. All right, guys. Well, you know where to find us. This is a short one, but hey, there was some. Hopefully, you guys got some value out of it. Some good trades this week, and you know where to find us.
Thank you, everybody.
Yep. Take care.